The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 27th fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. And today, you and I get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. You can always let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, and inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fabulous, fantastic, Freaky Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 117 points, 25,410 is the print. S&P's off 22 points. She's trading at 28.15. NASDAQ 100 down 1 6/10% to 118 points. Russell off 32 buckaroonies. That's 2% to the downside. Semis down 10. Tranny's off 44. Spot volatility index up 12% right now. It's up $1.54. You know, that's an end of day reading percentage-wise that you're going to want to pay attention to. Gold is off 70 cents. Silver's up 4 pennies. Light sweet crude down $1. And leading the charge to the upside, it is Chipotle. Yeah, they're handing out free guacamole, I hear. I don't think that's today, but it's on guacamole. It's on Avocado Day. What is that Avocado Day? Right now, they're making guacamole because it's up $23. It's mean and green. That's 5% to the upside. Equinix up $12 or 3%. Amazon up 0.6%. That's $11. Expedia up 10. Lamb Research up nearly 10 to the downside. Boston Beer. Wow. Down $37. That's off 12%. Google down 34, 2.5%. Mettler Toledo down $25. That's 4%. Log me in. I think somebody's saying log me out, as there's 592. Wait. Doesn't show me the number of shares here. But there are a lot of people logging themselves out of Log Me In. That's down $25 or 24%. So certainly we have things to look at, but I want to look at what you want to look at. No request actually thus far. So let Steve Areno take it away. Let's go ask ourselves the question. Hey, Steve-O, what's going on inside these markets? Well, let's start with the things that we do know. And one of the things that we know is that we still are in a consolidating market out here. This is a picture of, and when I say consolidating, really referring mostly, not entirely, mostly to the Dow and the S&P. At least that's what we're going to take a look at as we speak right now. On the left-hand side of our chart is the Dow. The right-hand side is the S&P 500. And consolidations and consolidating patterns are boogers to be able to, and I'm not talking about the kind you pick from your nose. I'm talking about the kind that are just, what kind are you talking about then? They are little boogers to be able to try and trade out here. Because again, one day, few days, a week, you've got the bulls that are happy, then you've got the bears that are happy, and they can be very frustrating. And consolidations can last for a long time. If you take a look at the previous index consolidation that we dealt with, it was taking us from the 2013 time period and wasn't broken out of until 2016. Yeah, That was a long period of time. I'm not saying that we're going to be looking at another 3-year time frame out here. Our consolidation, we didn't know it at the time, but for all intents and purposes, began back in October of 2017. I believe that was right around election time. Now, price took off to the top side, and inside both the Dow and S&P moved higher from election time in 2017 all the way up until the end of January. Now, it's not uncommon for the markets to make some type of top in January. Usually it's in the early part. In this case here, it was put off for a few weeks and it was formed in the end of January. Now, price pulled back. There was a big vicious pullback into February, and that really, in essence, set up the bottom of that consolidation pattern. When we take a look at the Dow, or we really take a look at the S&P 500, and you can see the square, the box, the rectangle, whatever pattern it is that it looks like to you that I've drawn in here. The S&P 500, in essence, made it nearly up to the top of the consolidation. It still may do that, but the key is, the key will be when these consolidation patterns break out here. So that's what we're in right now. If you're a bear today, just remember you're in a consolidating market. We'll give you a few price levels to be watching so that if you're a short-term bear, you take that trade off of the table, or you at least consider doing so and not carrying it over the weekend. Or I'll also give you some figures that says maybe I'll go ahead and keep it on the table. If we take a look at the daily equity contracts out here, yesterday we had a email came in from Jay, and Jay was asking to get into the Russell 2000. And the Russell 2000, I asked Jay to wait, to be patient. And the reason I gave him targets to look at, one was 1685, another was on the weekly time frame. Take a look at the equity futures markets, because Jay had asked specifically about the IWM, and I said, I am not going to give you information about trading the IWM based upon using the ETF to come up with our targets. We are not going to do that. You and I are much better than that. We know that if we just take a look at those index ETFs, we are going to get shellacked. We don't like getting shellacked. We like maybe putting shellac on things, but we do not personally want to get shellacked out here. Now, the Russell 2000 making a huge move right down to support on its weekly time frame. 1660 was the number. 1660 and some change out there. The actual low, we've seen 1661.20. So it's down at support. You're going to want to watch 1660.60. If there's a close below that today, there's a problem, Jay, inside of the Russell 2000. Problem being more of a pullback. And we'll have to really try to figure where that price might move us to. But as we speak right now, you were itching, I don't know if you were itching or not, to get into the Russell 2000. I said, please be patient out there. And so now price is at that level. Is this the end of the move? Was the Russell 2000 one that was kind of leading the move down, and it's over? Maybe. Absolutely may be over, because prices come right down to support. Do you take action right now? Nah, I don't see any reason that you need to. Watch 1660.60 on the Russell 2000 equities futures contract. The reason that we wanted to be careful yesterday was because of that price relative strength, that Rhodes momentum indicator signal that was present back on July 10th. That was actually the day subscribers and I went neutral the market. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
So we've got a request inside the Tiger's Den asking us to go ahead and take a look at the 30-year T-bond futures contract. We're looking at the September contract. That's what's up on your screen. If you're watching us on Tiger TV, you're looking at 4 windows, really 5 windows, but the 4 windows you want to pay attention to: the 60-minute, the 240, the daily, and the weekly time frame. And the question goes like this: please bisect it. I shorted for a gain earlier in the week, covered at 142.23, and now bought today at 143. I see a bounce scenario to maybe as much as 145, 146. What, in essence, what say you? So great short. I too was short. I covered a day. It looks like a day before you did. So, and the reason that I covered was because of this nice wide-ranging bar here on July 20th, and early in the morning on Sunday, it looked like price was going to find support at the bottom of its daily profile, and I was wrong and was proven wrong. I exited the trade. So how wrong could you be? Made money and exited the trade just a tad early. Thought that the 143.25 was going to go ahead and hold because it was a bullish structured market profile out there. I was wrong. And once price broke through that, it went to its next level of support, that on the weekly profile. And the weekly just formed a brand new profile this week. And the new profile formed this week, I should have just paid attention to it, but I didn't. But if you take a look at where support is, take a look at the bottom of that box, 142 and 29/30 seconds out there. And so if you covered at around 140, I don't see, where was that cover? You covered really right around the bottom of that profile. So it looks like 23 level. So even below that. Now what you're watching, so the scenario is where T-bond futures going to close today. Because if they close below the bottom of the box, then the move to the downside may not be over. And if it closes right where we're at today, just a few ticks above support, can I see a scenario where a bounce takes place? You definitely want to see the bottom of this box, the bottom of this profile hold the support. Where is it that I would see the bounce headed to? I would be looking at 143.24 or 144 even. That happens to be the bottom of the daily and the point of control, the center line, that gray, the blue cyan colored line on the daily time frame chart. Can it get to the 145, 146 level? Yes, but it has to contend with that level of resistance first. And that's why I would see some real potential resistance inside of a bounce. So it looks good so far, but I would say don't carry the trade over the weekend if it closes below the bottom of that weekly profile at 142 and 29 30 seconds out there. And when I take a look at, I'll get it out. I'll spit it out. When I take a look at just simply a short-term time frame chart here, like a 30-minute time frame, it fulfilled its responsibility earlier. It did this several hours ago, and it did this when it bounced all the way up to that Tom DeMark trend line, that little green dash line that began that 9 count to the bottom, and price hit it, boom, and rejected it big time. Now, here on the 30-minute time frame chart, what it hasn't done is it hasn't pulled back. It hasn't closed underneath its 30-minute Stevie Christmas line out there, which is it's around 143 basically. So you've got really kind of right in this area. You've got some levels of support that you would like to see hold throughout the rest of the day out here. So that's my take on the 30-year Treasury. Now let's kind of shift back towards the equity markets out here and try to paint the picture. Now, inside of the Russell we know generated for you and I that Rhodes Momentum Indicator top. It has always been a bit of a concern here and for days with regard to what the NQ was doing. And today is the confirmation and completion of that pattern. It's one thing to get a confirmation. It's another thing to totally complete it. What do I mean by complete? I'm going to use the term bearish from a directional standpoint. Bullish means it's moving higher. Bearish means it's moving lower. Not saying it's a bear market. Two totally different things. Anybody who tells you that it's the beginning of a bear market, just turn off that station. Don't listen to what they have to say. It is just not the case out here. But in the case of the NQ today, now what it is likely to target is 71.57. That's the top of its weekly profile out there. It may also make its way down to its Tom DeMark setup line, and that is down quite a bit further. That'll take you all the way down to the trading day of July 2nd out there. Yeah, just before the fireworks, we're getting ready to be shot off, and that's in the 69.87 area. So the NQ has completed and confirmed the Rhodes Momentum top. What that means is you look for levels of support. And inside the NQ, those are the levels. In essence, 71.57, and we'll call it 69.96 out there. So 2 of the 4 equity futures contracts have given us topping signals. If I look at the ES mini out here, it really depends on a couple of factors. Where is the day going to close? Now, what we can see is so far a pullback, and a pullback below Stevie's Christmas line, this red-green line at 28.22. So that's a level to be watching, but 28.18 would be the top of its daily profile. If price can close above, well, if it closes above both of those levels, this has been nothing more than just a simple retracement back to support inside the ES Mini. NQ, different story. Russell 2000, pull back to support. So you've got the levels to be watching. What does it mean if price closes below, let's say, the 28.18 level? Then that says to me 27.86 becomes the nut of where price would move back to. However, and here's the big however, what I want you to pay attention to come the end of the trading session is what is the spot VIX index? What is its one-day rate of change? As we speak right now, the one-day rate of change is 14%. That means the close of yesterday versus where we're trading right now is up 14.09% as we speak. The reason is that when we see one-day rates of change greater than 10%, don't ask me why. Well, the reason why is I did a lot of work, and that seemed to be the number that actually generated the highest probability of what it is I'm about to say. And it's just about mastering probability. And that is when you see a rate of change greater than 10%, what you see within the next 24 hours, it used to be 48. Now it's really shortened its time frame within the next 24 hours, a bounce or bottom inside of the market. So if somehow the spot volatility index has a one-day rate of change greater than 10%, and the S&P or the ES mini in this case here, which we were taking a look at, closes back above support, Stevie's red-green line, the top of that box out there, that's a real signal to anticipate that come Sunday, Monday, Tuesday, you're going to see the markets move higher. Yeah, that's exactly what it means. What's the better bearish case scenario? Is price closes in the ES mini below those levels we looked at, and the spot volatility index doesn't have a 10-day 9.99. I don't want to go. That's kind of pushing it, but something less than a plus 10% one-day rate of change. Of course, you and I yesterday. Hey, who was it? It was Tucker. Tucker said to me, "Hey, Steve-O, you see that little rising bottoms pattern in the spot volatility index? Isn't that telling us to anticipate some type of pullback?" And Tucker was right on that. Steve Rhodes for TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. JJ writes in. He says, "Hi, Steve. Just a general question today. Why would stocks like Twitter and NVDA, affect stocks like Amazon, which are completely different businesses? The entire baby is being thrown out with the bathwater at the noon hour today. Lots of laughs." Well, JJ, great question. And I couldn't really provide you with any information on the general question as to why, if I didn't have this tool. So I got this question during the break, and then I pulled up Stevie's correlation chart tool. And what you will see if you watch this on Tiger TV. So JJ, great question. And what I like to do is just let the facts answer the questions that you and I have. Well, questions like, well, if rates are going to rise, isn't that going to crush the market? Now, you and I know, because we go back and we take a look at years and years worth of data, we look at it and say, hell no. Anybody who's drinking that Kool-Aid is truly drinking the Kool-Aid, because we know that that is not a correlation that works. Just like now what because you brought it up, is that if we take a look at NVIDIA, top panel, Amazon, bottom panel, and we do a correlation to see if they are directionally correlated to each other, the bottom panel is what shows that in all bars that are above zero, even though you don't see the zero line, they're either above zero or below zero, in essence, for the most part. If it's above zero, it says it's a positive correlation, mean up or down. And I've got this on a relatively short period out here. I believe this is on a five-day average period out here. And when you take a look at this, for whatever the reason is, they are correlated. It's not really the baby with the bathwater. It is the mere fact that NVIDIA and Amazon, from a directional standpoint, in fact, are correlated. Why? I don't know. Just like saying, hey, interest rates are going up and is the market going down? No, the market goes up on average during those time periods. Why? It just does. That's all that you and I need to know. We just need to take a look at these tools, find out if they work, do the testing on it so that it provides you and I with an edge. It's just like the 1-day rate of change in the spot volatility index. It's just like seeing a rising bottoms pattern in the spot volatility index. You see, there's so many uses for it other than dealing with this godforsaken, it's a fear index, and there's no fear, there is fear. That's garbage. You can't do anything with that other than whine, and I don't even really do a good imitation job of whining out there. But what we do know is that when we see a pattern which has a rising bottom spot volatility index in the face of a rising S&P 500, green diagonal lines at the top and on the bottom, they have, as long as the pattern's been present, doesn't tell us when. Terrible for timing. We have to use other tools for that. We have tools that can assist us with that, but it has led to some type of retracement. The last time we dealt with that, this was on the trading day when the market began moving lower to a certain extent, was really on June the 13th. It moved lower for, looks like maybe about 5, 6, 7, 8 trading sessions, maybe a bit more than that. I don't know whether it's going to do that this time or not. This could be the pullback. We know the levels to be watching inside the ES Mini out there. So that's we already know what to be watching for. The other thing that you'd be watching for is, does the spot volatility index close above or below the 50-day exponential moving average? Let's say you're short today, and let's say that price closes just slightly below the top of the box, but the spot volatility index closes below the 50-day line, which is 1383. We're at 1389 right now. And your sphincter muscle on the short side should tighten. You might want to say, take my day's profits, take that beach ball home, and I'll come back and take a look at it on Sunday out there. Because if the 50-day exponential moving average is acting as resistance out there, we know that what the S&P likes to do when the spot volatility index is trading below that is move sideways to higher out there. And days like today, of course, you get a pullback. I'm giving you the general scenario of what to be paying attention. If you just use those tools for the spot volatility index and stop calling it fear gauge. This is the greatest gauge of all these sets of tools. I won't say the greatest, but they rank up there as far as top tools to be able to help you to identify what the markets are doing. So JJ, I didn't know it, and it doesn't look like you knew it as well, but Amazon and NVIDIA, different businesses or not, they are hooked together on the stock chart when we took a look at their correlations. So thanks for writing in. No other questions that I see inside either the Tiger's Den or from you folks out there, listeners. You can give us a call. You can send me an email, steve@tfnn.com. If you wait too late and I get them all at the end, then it makes it really hard to provide you with great information out there. Okay, so what else are we going to take a look at? Geez, what do we want to take a look at out here? Let's take a look at what do we want to take a look at? The usual suspects. It kind of get boring probably talking about the usual suspects, gold and so forth. So let's go take a look at things that are moving and grooving. Do you like Sam Adams beer out there? It's not one that I typically order. To me, there's better beer than Sam Adams. Nothing against it. I think there's many better beers out there. And apparently shareholders today think there's a lot better stocks to be holding versus Sam Adams. This thing is gapped down with volume of about 547,000 shares out there. And if we take a look at it, where's it trading back into? Geez, I don't know. I don't see anything where it's trading back into. So let's go take a look at at least below the daily set of profiles out here. Just for the heck of it, SAM is the ticker symbol. I don't know if this is going to update. No, but it did not update. But you can see it had the Rhodes momentum top out here. How about that? Sure enough. So here's the top. It had that top. It formed right out here July 17th. You got the confirmation on July 18th. Little shooting star candle. That's the bearish reversal candle. Price continued to stay, even though it was gradually moving higher, below Stevie's Christmas line out there. And so, and then you got another bearish reversal candle yesterday before the gap to the downside. So actually not a surprise. Has pulled back further than one would have thought. We would have thought maybe that Tom DeMark short-term trend line from the low of July 6th out there would have held it. That was at 296.05. Right now you're trading at 279. So that says that maybe there's some larger troubles for Sam Adams. Let's look at the 3 time frames out here. Let's put SAM on the screen out here. And, well, it's got quite a ways to fall back as far as support goes for its weekly or its monthly time frames out there. I'm not even going to suggest that it's heading back to 202 or 194, even though those are the levels that, in essence, would be in play out here. Probably more likely. Can you say probably and then more likely? Probably you can't, but I just did. After making 100% move on a monthly basis out here, that means price in January of 2015 was up at 325. Volume there about 2.3 million shares, and this month you're at about 2.9. So 2.9 actually says it probably will be back up here at some point in time. But right now it just simply wants to take a break. Move, meaning previously price was up here. Then it moved lower for many months out here. In fact, down into June of 2017. Didn't take too long to get back up to the top, but it's kind of exhausted after that kind of a marathon. Right now, we've got the Dow. She is trading down 125. S&P's off 24. Good.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. For Michael P wrote in. He said, hello, Steve. I sold my Valero, VLO, is the ticker symbol, calls today. How's it look longer term? So if we take, and so, hey, congrats, Mike. You made some nice money out there. So that is a wonderful, big, huge, wide-ranging bar, in essence, yesterday, which is going to result in a wide-ranging bar for the week out here, and maybe the start of a V bottom. It's which is a very bullish pattern out here, Michael. And you know, markets don't end typically on wide-ranging bars, and certainly Valero didn't. So I know that's why you stayed in there through today. And at this stage here, with it being above the daily profiles, I would have to say price is going to target the top of the weekly box, around 122.84. If it closes out the week above 114.55 out there, pretty good chance that it will. If we take a and above that, it could get all the way back to the highs out here. So, and you had nice volume yesterday. So it looks pretty good. Valero, when it was making that bottom, I have no idea what pattern. Here it made the top with that Rhodes momentum indicator. All right, so we know what to look for out here, and it did that nice little shooting star June 4th, completed the pattern on June 5th. Now, when I say completed the sell signal, and then things moved lower. I don't know what kind of wave count it did to the downside. Was not wave number 7, that is for sure. So it doesn't look like it was a wave count that gave us a bottoming signal out here, and you know, didn't see anything really that gave us that bottoming signal. Yeah, I just don't see it. But to answer your question, it looks to me like it wants to run higher, and that is on ticker symbol VLO. But nice job making money on that trade out there. So congrats to you. No other. That's a statement that says the daily chart of the NDX 100. Let's go take a look at it. That too was giving us a Rhodes momentum top signal out here. Let's go take a look at that. And these are important patterns certainly to pay attention to. And if we take a look at it, the statement was a sequential sell from July 19th. Well, what you probably didn't know out here, Mr. Z, was that 2 days ago was a Tom DeMark setup sell combo, number 13, red number 13 here. If I get rid of the wave counts to the upside, you can see prices moving higher, doing less relative energy, and you can see that you got that Tom DeMark combo count. That's red number 13, and that was just 2 days ago, July 25th. Now you've got to close below the session 4 bars earlier, so it has confirmed that pattern. Additionally, We're trading below Stevie's red line. That opens up the door to move lower out there, and that's on the NDX 100. It certainly has problems. The NQ, as we talked about, at least as of the 105, 110 time frame when we were looking at it, was most certainly giving us that signal that it wants to move lower, even though the S&P may. I said may find support out there, and you've got to take into consideration the one-day rate of change. You get the definite signal here for the NASDAQ composite. It, too, did the same thing, by the way, so I just throw that out there because maybe you're only looking at the NDX 100. Here's the NASDAQ composite. It, too, creating that Tom DeMark combo count, red number 13. Price moving higher, doing less relative energy today is the bearish engulfing candle. So price can easily pull back all the way back down to the, I believe it's the July 6th date. Is that it? It's July 2nd. No, it's July 2nd here. That would be your target to the downside of 74.43. And that's a pretty big move. You're at 77.23 right now. So that still is potentially in the cards. But thanks for bringing that to all of the Tigers and Tigresses' attention out there. So what else? And we don't have, if we take a look at markets, if we take a look, for example, the semiconductors out here, yes, pulling back, but, still trading above Stevie's red line at 1357. So when from a Chapman wave count out here, looks like maybe this thing wants to continue and eventually move higher and make that fourth wave out there at a minimum. So the SOX looks okay, even with Intel, which is kind of interesting, right? Intel, I know it was had gapped down earlier. Where's that thing trading at? Yeah, so that thing is gapping down and actually potentially confirming an A to B equals CD to the downside. So the semiconductor Intel, I think, is the largest weighting. Maybe not, but I need to switch over charts here. Because this one's got my A, B, C, D pattern on. INTC is the ticker symbol, and it had already completed one small A to B equals CD pattern. Now the larger one, it looks like it's in play out here. The large one, we start with the same A point out here, trading day of June 4th. Now the B point would be June 28th, and the C point would be the retracement of July 24th. And I would say Intel could easily be targeting 44.20, 41.73 would really be my basic target area. Why? Well, if you take a look at where the 1-to-1 or 1.272 levels are trading at, it'll take you back into a zone of where Intel broke out with big volume, was tested in essence with support. That was October 27, 2017, 90 million shares. Today you're pulling back with lighter volume than the 90 million, but more volume than the B point. The B point out there at 29, you're already at 50. So it does look like Intel, looks like the semis haven't yet tested support. But with the weighting structure inside it in Intel, it's going to be a struggle to really move mucho higher. But it does look like it may want to, or Intel wants to, in fact, move lower out there. We took a look at Sam Adams. That was on the bearish side, so to speak, out here. Let's go take a look at something on the bullish side, that being Chipotle. CMG is the ticker symbol. So that thing is back taking out or trying to take out a prior swing point, and that was the trading day recently, June 22nd, so just a month ago. That high was 474.46. There was volume there, 663 or 1.5 million shares right now. Price will be back up there. Doesn't mean Monday. Doesn't mean Tuesday. But it was pushing higher with volume. Yeah, it's traded a little bit lower. It's rejected that level, but that's all it's done. It's rejected it and said, I'll be back up there on another day. That's what's going on with Chipotle. Let's go take a look at Expedia. In fact, there was a caller maybe yesterday, not a caller, but an emailer, wanted to take a look at EXPE. So, and I think we were just going off the air. So let's go take a look at Expedia. Trading up today, gap to the upside. I'll imagine had earnings out here. And I probably said something like I wouldn't want to be long going into earnings because on the daily time frame chart, price had closed. It looked like it was going to close below the top of that box. If I said that, well, it looks like I was just simply dead wrong. It couldn't be more wrong because look what it did. It actually moved higher. The problem with Expedia, the problem from a technician standpoint in trading, are these gaps out here. And big gaps volume gaps as well, because you had 20 million shares to the downside back on October 27th. As nice of a day as it's having, it's only 5 million shares to the upside, but you're really kind of inside that gap, so to speak, the gap between what I'm going to call right now an untested level of price between 133.68 and 144.95. So for all intents and purposes, with the volume behind the move, ought to get up and test the 144.95 level. We'll come back. Maybe we'll come back and look at it on Monday. Maybe we won't. I don't want to be wrong twice in 2 days, opposite directions for the same stock. I wouldn't want to do that. Dow is now off 87. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome, folks. Of course, we got 3 questions for 2 minutes out here, so let's try to get to them. One coming in from Nick. Nick quickly says he got into the SQQQ trade earlier today and is wondering if he should get out now. If it is a short-term trade out here, then what I can tell you, this is a 30-minute chart. We have a confirmed A to B equals CD to the downside. You can see it made the 1 to 1.27 level. What it did the last half hour, meaning coming into 130, was created a hammer. You're having some additional follow through at this stage here. Looks like, and you're trading at 73.09. Looks like the NQ wants to bounce up to 73.55 at least. Stevie's red line. So if this was a short-term trade and you're asking me should you take those profits, I would say yes, based upon the completion of this 30-minute pattern out there. If it's a longer-term time frame trade, then 30 minutes was the wrong time frame for you and I to go take a look at it. Phil wants to take a look at Zillow. Do I have concerns today with regard to today's price action, volume, and so forth? If we take a look at Zillow moving down, trading right now, filled down into the bottom of its daily profile. That's 57.84. Volume behind the move, 2.27 million shares. Last time it was down in this area was June 29th, was 6.2. So the sellers really are more on the beach, on vacation, than they are here. Good price destruction, but not any volume to be overly concerned with today. Don't let it close below 57.84. Or if you're looking to take a long trade in this, don't let it close below 57.84. You might have to do some more work on that. Dave wants to take a look at XOM. Let's see if I can do this in 15 seconds. Dave got in XOM from a long standpoint. I don't have the price levels. You want me to just take a look at XOM, ExxonMobil? What is it doing? You know, Dave, no reason for ExxonMobil to not pull back to $80.12 out there. 80.67 to 80.12 out here. What you really don't want to see it do is close below those levels. If it closes below those levels, you could see some lower price. That's an ExxonMobil. Folks, thanks so much for being here this week. Have a great weekend, a safe weekend, and look forward to seeing you on Magnificent Monday. Stay tuned. Your favorite polar bear, David White. He's up next. Have a great, I already said had a great weekend, so have a doubly great weekend, and I'll see you next week. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.